It's 2:17 a.m. in Washington. The lights are still on at the Federal Reserve. Not the public floors, not the museum, the upper offices. Across the ocean, it's already morning in Frankfurt. Traders are awake. Tokyo is closing. London is half asleep. But a handful of people are still working. Not politicians, not CEOs, central bankers. And in the next few hours, with a few sentences and a quarter-point change, they'll quietly move trillions of dollars. Currencies will jump. Mortgages will get more expensive. Startups will die. Governments will panic. And most people won't even know it happened. No vote, no headlines, no debate. Just a decision, and the world shifts. This is the quiet power game between central banks. And right now, it's getting dangerous. If you've noticed lately that everything feels off, higher prices, weird market swings, countries arguing about trade, currencies suddenly collapsing, it's not random. It's not just inflation or the economy being weird. It's pressure. Pressure between the biggest financial institutions on Earth. Because behind every country's money is a central bank, the Federal Reserve, the European Central Bank, the Bank of Japan, the People's Bank of China. They don't just manage their own economies, they compete, quietly, constantly, and sometimes aggressively. Not with tanks, with interest rates. Here's the strange part. Central banks aren't supposed to compete. Officially, they're boring technocrats. Their job is simple. Keep prices stable, keep unemployment low, don't break anything. Very dull, very responsible. At least, that's the story. But money is power, and whoever controls money controls everyone else's options. So when one central bank moves, the others have to react. It's less like accounting, more like chess. Let's slow this down. Imagine money is water. Interest rates are the slope of the ground. Water flows downhill. Money does too. If the USA offers 5% interest and Europe offers 2%, where does the money go? To the USA, always. Because investors aren't patriotic, they're mathematical. Higher return wins. So trillions of dollars flood into dollar assets, treasury bonds, USA stocks, USA banks. That pushes the dollar higher. And when the dollar rises, everything else feels it. Now the side effects start. A stronger dollar sounds good, right? Strong country, strong currency. But it's weirdly destructive because most of the world borrows in dollars, not pesos, not rupees, not rand, dollars. So when the dollar gets stronger, their debts get heavier. It's like owing money in gold while your salary is paid in sand. Suddenly, countries can't repay loans. Imports get expensive. Food prices jump. Governments wobble. All because the Fed nudged rates by 0.5%. 0.5%. That's the absurd part. Tiny changes, massive consequences. This is where the game begins, because other central banks see this happening and they think, if we don't act, our money will flee too. So they raise their rates, not because their economy needs it, but because they're scared of losing capital. It's defensive, like everyone's sprinting because the person next to them started running. Nobody knows where the finish line is, but nobody wants to be last. Look at 2022. The Fed started hiking aggressively, 0% to over 5%, fastest in decades. And suddenly, the euro fell. The yen collapsed. The British pound crashed so hard the Bank of England had to step in and rescue its own bond market. Japan spent billions just trying to stop its currency from sliding. Emerging markets were scrambling. Sri Lanka defaulted. Pakistan nearly did. All because dollar gravity got stronger. One country pulls, everyone else gets dragged. And here's the irony. Central banks publicly talk about domestic mandates, jobs, inflation, stability. But behind the scenes, they watch each other obsessively. Every speech, every sentence. A comma from the Fed chair can move global markets more than an election. It's almost funny. We think politics runs the world, but half the time it's a group of economists with spreadsheets. Now let's talk about the mechanism nobody mentions, the hidden math, the thing that makes this game unstable. Debt. Global debt today is over $300 trillion. That's governments, companies, households, all stacked up, all dependent on cheap money. For a decade after 2008, rates were basically zero. Money was free, so everyone borrowed. More houses, more startups, more government spending. Everything looked fine because interest payments were tiny. Then rates rise and suddenly the math breaks. If you borrowed at 1% and now refinance at 6%, your payments don't go up a little. They explode. 5, 6 times higher. Companies that looked profitable suddenly aren't. Governments that looked stable suddenly aren't. It's like the tide went out and we're realizing how many people were swimming naked. So each central bank is stuck. Raise rates to protect your currency and you crush your own economy. Lower rates to save growth and money escapes your country. There's no good move, only trade-offs. It's monetary whack-a-mole. And here's where it gets quietly tense, because not everyone plays by the same rules. The USA has the dollar, the reserve currency, the cheat code. Most global trade runs through it. Oil, dollars. Debt, dollars. Reserves, dollars. So when the Fed tightens, the world feels it. But when smaller countries tighten, nobody cares. It's like one player has gravity, everyone else just reacts. That imbalance creates resentment. You can hear it in speeches now. Countries talking about de-dollarization, building alternative payment systems, trading oil in yuan, stockpiling gold. Not because they hate the dollar, because they're tired of being collateral damage. But replacing the dollar is like replacing oxygen. Everyone complains about it. Nobody actually wants to try living without it. So the system limps on, unstable, dependent, awkward. Meanwhile, markets keep cheering every time a central bank promises support. Cut rates, print money, stimulate. It feels good. Stocks go up, housing booms. Everyone celebrates. Until inflation shows up. Then the same medicine becomes poison. So they slam the brakes. Recessions follow. Then they cut again. It's almost comical, like flooring the gas and slamming the brakes over and wondering why the car smells like smoke. And through all of this, regular people feel it last, but hardest. First, it's abstract. Bond yields, currency charts. Then it's groceries, rent, car payments, layoffs. The game is quiet at the top, loud at the bottom. Here's the uncomfortable truth. Central banks don't control the economy as much as we think. They're not puppet masters, they're firefighters. But they're also the ones who sometimes lit the match years ago. They're reacting to problems created by the last round of reactions. It's recursive, a loop. Lower rates cause bubbles, bubbles cause crashes. Crashes require lower rates. Repeat. And every cycle gets bigger, because the debt pile gets bigger, because nobody wants the pain now. So they push it forward. Which brings us to today. Rates are still high. Debt is still massive. Geopolitics is tense. Countries are less cooperative, more nationalistic, more suspicious, and central banks are less synchronized than they used to be. That's new. In 2008, everyone coordinated. Now, everyone's protecting themselves first. That's when currency wars start. Subtle ones. Competitive devaluations, sudden interventions, quiet capital controls. Nothing dramatic, just enough friction to slow the system down. And that's the risk. Not collapse, not some movie-style crash, something slower, stickier. A world where money moves less freely, trade fragments, costs stay high, growth stays weak. Not a crisis, a grind, the kind that lasts a decade. Because when the people controlling the world's money stop trusting each other, everything gets more expensive, everything gets slower, and nobody announces it. There's no speech that says the golden age of easy money is over. It just fades. So the next time you hear that a central bank raised rates by 0.25%, it sounds tiny, boring, technical. But somewhere, a currency is sliding, a government is panicking, a company is quietly laying people off, and a few people in a building with the lights on at 2 a.m. are deciding what to do next. Not heroes, not villains, just humans moving levers connected to the entire planet.
hoping they don't pull too hard, hoping they're not too late, hoping the other banks don't blink first. Because this isn't cooperation. It's not exactly war either. It's something stranger, a silent standoff, a game where everyone moves at once, and no one really knows what happens if they all miscalculate at the same time. And that's the part that should make you uneasy. Not what they're doing, but how much depends on them getting it exactly right every single time.